everyone, welcome back to your Market Watch Weekly. Thank you so much for joining me today. It's absolutely fantastic to have you here, checking out the world indices around the world from a chartist's point of view, and also giving you a whole bunch of charting tools that you can take and use in your own trading straight away if you want to, but otherwise just getting a really good view of where the world is heading according to the charts. Let's just jump straight into it because we believe that 3 out of 4 stocks might follow the overall index. So no matter where you are around the world, 3 out of 4 stocks may be following the overall index, and so that's a great way to find out which way you should be trading in your own trading. Let's just jump straight into it because we're looking at the whole world. As I said, we're looking at the All Ordinaries down under, we're looking at the Dow Jones in America, the FTSE in Europe, the Hang Seng, the Shanghai Composite in Asia, the Nikkei in Japan, and also the BSE index in India as well. So guys, so much to get into, and let's start quickly in Asia because what we've got, the Shanghai Composite last week, this is in China, guys, and everyone, people are still watching China just a little bit. This is the Shanghai Composite. This is a daily chart, so each of these 1 bars is 1 day. Now guys, a couple of weeks ago we called a short-term entry signal. This is the downtrend line here. I'll just get rid of all these other whoa, look at all these lines, goodness me. But what we're using is a simple trend line. Really simple stuff. This is the downtrend line here, guys, and it was crossed a couple of weeks ago. We called the short-term uptrend, and the market since then has absolutely continued that short-term uptrend. Absolutely beautiful stuff. And again, that's really not rocket science what we did there. What we do have in the future though is medium-term downtrend resistance. So what we've got there is about 3,000, 3,100. That's where we're expecting the next resistance level for the Shanghai Composite in China. But in the meantime, we're sort of forming this little triangular pattern, which is just a beautiful thing. If it breaks out above that, then we could expect more bullish action after that. So happy days on the Shanghai Composite. Checking out the All Ordinaries next, just really quickly. A couple of weeks ago, this was like when the Nikkei and Japan was sort of melting down, and we had that sort of mini correction or mini crash. At the very bottom down here, we called a short-term up move. Why did we do that? Simply because it started high, went down throughout the day, and it closed on its highs as well. This indicates that buyers came back into the market at these levels. And what has the market done since then? The market has gone up, and that's exactly what we wanted it to do. Now this correction did come out of left field. We did call a short-term exit signal, and then right down the bottom here we called a short-term entry signal as well. What we're expecting now, guys, just if we were to look at this type of move throughout history, just really quickly, because what we're doing is we're going for a new test of 5,000. 5,000 being a round number. It's a psychological number. It's a number that tends to find resistance for investors and traders, just at that psychological level there. You may find that we'll find resistance there as well in the future here. But what we're looking at is this sharp move and then the sharp move back up. What we've got is it has happened before over history. It has definitely happened before. If we have a quick look, say let's go back to August 2007. If you remember the start of the credit crisis, guys, this is a little slingshot move right here. As you can see, it's gone sharply down for a couple of weeks, and then it's gone sharply up to the upside as well for a couple of weeks. What we had to sort of trigger the last final stage of that move was a little consolidation period on today's market, and as you can see, we're already forming it. All we need is the last little sort of consolidation pattern around the 5,000 level, which is a very high probability move. That's exactly what might happen. If we do see that and then price breaking out to the upside, that's a very strong signal, and we might see another 100% move of this previous slingshot, so another 400 odd points on the All Ordinaries there as well. So I hope that makes sense, guys. But yeah, that's a potentially excellent stuff, and these slingshots have happened a lot throughout history as well, so they're absolutely fantastic trading tools to use. Next, let's check out the Dow Jones really quickly. As you can see, Dow Jones, we flattened our trend line last week. Now, we did say we did have a short-term exit signal a couple of weeks ago, but the market has continued up, and that negated our exit signal there, guys. So the Dow Jones remains in an uptrend. There's not too much else going on the Dow Jones. Really, the strong uptrend remains, and even though we did have that little shakeout, yes indeed, the market has continued upwards. Again, same as with other world markets, what we're expecting is a little higher trough followed by a higher peak. So that would sort of confirm our move. And also, if you just have a quick look, what we've got is that little slingshot move again. So yeah, really, it's sort of happening around the world. Next one, just quickly, is the FTSE. The FTSE, as you can see, we had this broadening wedge pattern. Now, with the broadening wedge pattern, what tends to happen is it will find support at the bottom edge of the pattern and resistance at the top end of the pattern. So as you can see, it did find support at the bottom edge. So beautifully done there, at around the 5,650, around 5,700 on the FTSE. Now it is heading for a test of the upper edge of this pattern. So that's around 6,150, around 6,100 approximately. So that's what we're expecting on the FTSE, for the FTSE to head that way as well. And what have we got as well? We've got this little sort of head and shoulders, inverse head and shoulders pattern. And again, I don't usually trade these sorts of patterns, but what we're looking at is higher peaks and higher troughs. And around the world, what we're expecting is for these higher trough and then a higher peak, and that would sort of give us a confirmation of that signal. It would be quite a powerful signal for an up move there as well. Really quickly looking at Asia, back at Asia, the Nikkei in Japan. Now, as you can see, a couple of weeks ago, what we did actually call was a short-term exit signal. As you can see, it crossed the downtrend, the uptrend line there, made a little zigzag pattern down, and we called it a few days before that mighty crash on the Nikkei in Japan. Obviously, had no idea of what was happening around the world. The charts were simply telling the story. So beautiful stuff there. Right down the bottom here, we had a very similar bar to what we had with the All Ordinaries in Australia. So it started high, went down throughout the day, and then closed high as well. Now that signals buyers coming into the market and at that level. And what happened? The market has continued upwards since then. Now guys, what we've got now is a higher peak and a higher trough. So that has actually, or a high trough and a high peak, that has actually given us a shorter term entry signal. But there's just one thing that we have to remain very wary of on the Nikkei, and that's this overhanging resistance. So there's going to be a lot of resistance on the Nikkei in Japan. However, short term we had an entry signal down here, and now short term again we've got this this higher trough and a higher peak. That is our entry signal. That would be proven wrong if the market were to close below 9,300 on the Nikkei there as well. As you can see, now we do have our short term uptrend line. So that's something to sort of give us a little bit of hope, and that'll give us a little bit of support in the future with any luck as well. And especially we've got this new support level at 9,300 on the Nikkei there as well. So great stuff on the Nikkei in Japan. Next we have got the Hang Seng, and on the Hang Seng what we were looking at was this triangular pattern here. As you can see, we've got a lot of support coming up from the trend line, and then a lot of resistance coming up from the sort of trend line here on a medium term basis on the Hang Seng as well. What we had was that the market went down through the level, through the uptrend line. That gave us basically a short-term sell signal. However, it wasn't confirmed because we had these long-tailed bars. Now with these long-tailed bars, what that indicates, again, same as around the world, is that there are buyers around that level. So again, as you can see, just really quickly, we've got buyers there, buyers there, buyers there. So this is sort of our level of support, and obviously that did hold true with the Hang Seng. Now we're heading for a test of our resistance on the Hang Seng as well. What that means is, see this downtrend line here, that is our resistance at the moment at around 24,000. And if you just check out this market as well, what we've got is that little slingshot pattern again. And again, this is quite a common pattern at the moment. What we're seeing is it's basically happening around the world, and it's all we're needing for the slingshot pattern to sort of happen is a little consolidation on the right hand side here, and then for the market to continue upwards. So that's probably the highest probability move. We might see a little resistance at around 24,000 where this downtrend line is and where the previous resistance was, and then for the market to head upwards from there. So again, that's what we could be expecting on the Hang Seng from a chartist point of view. Now last but not least guys, this is the BSE 30 in India, and just really quickly, last week what we said was we had this little zigzag pattern up, and that's what we called a Dow theory entry, according to Charles Dow's writings in the late 1800s. Beautiful stuff. It's a theory that's about 100 years old, and it's worked a treat since then. Absolutely fantastic. But after that, the market has continued up, and that's exactly what we said it would do. What we've got just really quickly is we've got a bit of resistance coming up in the future at probably at around 20,000 or around 19 to 20,000. So basically that's what you might expect just because of that downtrend line there. But again, in the meantime, we did have this zigzag pattern up, called a short-term uptrend. Happy days, no worries there at all. In fact, Dow theory tends to be associated with more medium-term trends, guys, so that is a stronger signal. I think what we might find is that we'll see a bit of resistance around that 20,000. And again, what's 20,000? It's a big fat round number, so that could be like it's quite a psychological level. We might see a bit of resistance there, and after that we might see the market heading upwards again. So a little bit of resistance and then market heading upwards again. So that is basically the BSE 30 in India. That's basically the entire world from a chartist's point of view, and a whole bunch of tools. I mean, so many tools, it's ridiculous, guys. Take them and use them in your own trading. I hope it has helped in some way, shape or form. I hope you've gotten something out of this. It's absolutely great to check out the markets from a chartist's point of view. Fantastic stuff. Guys, I will see you next week for more world indices charting signals. Until then, happy trending and bye for now.